Felix here, and welcome to this pre-market live stream from the south of France. I hope you can see a little bit of blue there behind me. And in the next few minutes, I want you to walk away as the best informed investor out there, as a more confident investor, as somebody who actually knows what to do with today's moody market. Because Moody's has downgraded the US. I put a video on that yesterday if you didn't catch that. Basically, they're saying, we think your debt's a little bit out of control. And of course, it's been out of control for the last 10 years, certainly for the last 5 years, but they chose Friday evening to announce it for whatever reasons, politics or not, I don't know, don't really care. I just take the facts in the market the way it's handed to me every day, and then I look for the big, beautiful, shiny opportunities. And then what do? I love all the chat here, guys. A lot of chat about stops, and I really, really like that. But to talk about like adjusting your stops, loosening them, or like buying back straight back in when your stops got hit, that's not the point of a stop, guys. So come back and refocus on the rules. And let me share my screen with you so we can go straight into real value here. So this is what Bloomberg's saying out there, Doomberg as I call them. Treasuries dollar fall as Moody's sharpens focus on US debt. And what's it actually about is that sort of chart that they're showing you here. And I've got a slightly bigger version of that. This chart here is the interest rate the market demands from the US government to hold 30-year US government debt. And this is a chart that goes back to, I don't know what, 2015 or something. It's too bright out here for me to see the number. So you can see we're like at the very top of that expectation range. And that's not a good thing. That's the market basically saying, we think you guys run a bit of a banana republic and we want a premium for it. So why is that a problem? Well, the US pays $1 trillion in interest. And the interest rates go higher. This is the interest rate. This the market actually sets the interest rate, not the Fed. Then the US to pay even more for that. But it's not just the US government that has to then pay more. You have to pay more for your car loan, for your mortgage. And if you're a business, you have to pay more to borrow, to invest. And that does what? Well, there's two things. It slows down economic growth. And why am I not on the screen? I'm sure you guys are missing me terribly on the screen. What happened here? Okay, hang on 1 second. I'll try and find myself again. Here we go. There I am. Yay. So it slows down the economy. And secondly, it actually dampens the stock market. Because if I can get 5% holding government bonds, it's kind of attractive for a lot of people. It's zero risk, allegedly, and it's a guaranteed 5%. Well, you buy AMD, there isn't zero risk, right? Maybe there is a higher potential upside, but there isn't zero risk. So it's not a good thing for the market. Now, I don't think it's the end of the world, guys. I think it's a little bit of a blip. And I think there are a couple of reasons that make me feel quite optimistic on that. And one is that Hassett just came out and said, look, 15 countries are close to a trade deal. 15. And that the bond market's going to come down as we get those deals in. So there's a second thing also, there is taxes, and I'll talk a little bit more detail about that later in the week, but they are putting together a tax deal which will cut taxes, which again will be good for US companies, maybe not so good for the deficit, and that'll be kind of an interesting one. Yeah, so I want you to understand, like in any market, let me ask you this. If you knew what stocks to buy in any market on a day like today or on a day like last Monday where the market was rallying, would that be useful to you? If it is, put a U in the chat for useful. And I know that you're actually paying attention. And I also know that this is actually valuable for you, because that's always my intention, to give you guys as much value as humanly possible. It's a little bright out here to see my screen. So, okay, I'm seeing some U's pouring in there. Brilliant. Okay, so what I'm going to do is I'm back in a place where it's a little bit less sunny on Thursday. Actually, it'll probably be sunny too, but I will be sitting on the balcony, on the terrace. And I'm going to run for you a seminar where I'll teach you that. So I want to teach you how to pick great stocks, no matter what happens out there in the market, no matter what the noise is. And what that's done for me is it's helped me retire sooner, like way sooner, right? So it's very nice to be in your early 40s and be retired. I know some people who've done it even sooner because they started sooner, and I know some people who've done it much later because they started later, but you can always start now. That's always the best time to start. Well, yesterday probably was better. And it's really about having the same skill level by having the same rule book that the successful investors out there have. And they're not wizards. They like to pretend that they are, but they're generally not. They just know the rules. So I want you to walk away with the rules. What do we buy? When do we buy it? And when do we sell it? And how do we automate that so that we can set this up on a Sunday in like an hour and then forget about it? Like, I'm not doing anything today. I'm not doing anything all week, probably. I usually don't do anything all week. I didn't do anything last week, and we made like, I don't know, 5% last week or something like that. It's a good week. And even if the market goes down today, I lock in those profits because I've got stops in place. So I want you to get to that level where you have that confidence, where you have that ability. And it's really not about like, am I smart enough? It really is just about like, has somebody taught you the rules? Like I always say, play sports and you don't know which direction to like kick the ball in or whatever, well, you're going to lose, aren't you? Because you don't know what the rules are. If you know the rules, you have a much better chance. So that's what I want to really get to you guys on Thursday, 10 a.m. New York time, felixprehn.org/webinar. You can sign up there directly. And let me show you a couple of key data points for today. And by the way, the page you get to looks like that. You just pop in your name and so on there, register, you get a free seat. Make sure you're on time, because only the first 1,000 people will be able to chat with me live. And that's not me being mean. That's just the technology isn't able to handle bigger groups. And we have quite big groups usually. So we usually have a couple of thousand people in there. So make sure you guys not just sign up now while there's still seats available, but you actually show up on time or early. So you're one of those people you can actually chat with me. Now, the S&P here, this is SPY, which trades pre-market, and you can see that little blue dotted line here, right? And what do you see? Well, you see that we're a little bit below Friday's trading range, just a little bit. I mean, it's not the end of the world. It's like percentage point down. So from my point of view, I looked at the last time the US got downgraded. The market dropped like 10%, not in a day, but over the period. So a 1% reaction on day one is pretty good. It's basically where we were on Thursday. So this isn't really, the market's kind of going, you were the last agency who was just late to the party. We just don't really care that much. And quite frankly, rating agencies, I mean, you know, dodgy as they come, right? So I'm not too worried about that. Now, what about tech stocks? Well, tech stocks dropped much harder on the last downgrade. And this morning, they're down 1.4%. Again, not the end of the world, although it does look like a little bit of a gap down. You see that between the bottom of that candle there and where we are right now, the dotted line is a little bit of a drawdown. So what would I watch out for? Well, what I'm watching out for is, are we going to bounce off this 150-day moving average line there, which is that one? That's the, let me get a pen. Kingdom for a pen. Here's a pen. So that's the 150-day moving average line. And you can turn those on down here. This is in Trade Vision. There's a link down below to Trade Vision as well in the description. So if we bounce off that, it's actually a good thing. It'll actually make the rally stronger. But if we break below that because we get a bunch of bad news items, say the tax cuts are not happening or whatever, then we go lower, and then we are going to retest some lower lows. So watch out for that. So I think there's some nice, and I'm obviously an optimist at the moment. The way I look at this is like a nice opportunity to load up on some of the stocks that we like a little bit cheaper on the pullbacks, because there are quite a lot of stocks that we like that are currently like, they're pretty extended. So why don't we wait for the dip? And some of our tech favorites like a Palantir or something, that was at 130, now it's at 124. Well, isn't that better? Like if I said to you, come have lunch with me, but today it isn't $100, today it's $70, would you be happier? You'd be happier, right? So pretty much anything in the world you buy that's cheaper, you'd be happier with, but stocks for some reason we're not. So you just want to make sure it doesn't drop too hard, because then the direction changes. And there are examples for that, like PayPal, for example, is one that I would, that was weak before we got into this situation, right? So it's like, it's collapsing when the market's rallying. There's some real weakness in there. So that's something that I'm medium term certainly very bearish on. Long term, it's still a great company, but medium term it really isn't. David's putting in there Aeva, which has been one of our absolutely beautiful runners, is like a 130% up or something. And oh my God, it's up some more. Isn't that nice? So sometimes you pick these winners, and that's also why we pick a relatively large number of stocks, But we're now up, what, 132% or something like that. And that's flying while the market's tanking, which is also a real sign of strength. You're going against the momentum. And the volume down here is tremendous. So am I buying more right now? No, I feel we're getting a little extended. So I did buy a bit more like in this period here because volume was picking up. But yeah, these are the kind of winners, obviously, that we look for. And how do we find it? It's what I teach you on Thursday. It's literally like that's as simple as that, pretty much. Looking for 3 pieces of rules, and once they all align, we don't have to watch the chart. We just set it up in advance on a Sunday. And if those things come true, then we buy automatically. And then automatically we make a lot of money. And if we're wrong, then nothing happens. And if it goes up and then it goes down, we lose a little bit of money. So I give you an example. I think on the weekend, I looked at one of my portfolios that I have, and I over the last 2 weeks, I realized, and this is kind of, I think, important mindset piece. Let me write this down for you. So basically over 2 weeks, this portfolio lost $4,000, realized losses. Okay. You might be thinking, oh my God, Felix, what the heck are you doing? But you know what it's also done? It's generated $40,000 of unrealized gains. What does that mean? Those positions are still open because we don't cut our winners early. We only cut our winners when they start to become losers. So the net effect is plus $36,000. Now that would be risky if you didn't have automated risk management, because the $36,000 could go away and now you've only got losses left, right? But for me, that's a beautiful setup. So, 1/10 of my positions lost money, and I created 90% gain essentially, compared to the losses. So that's a really, really nice setup, and that's exactly what we look for. But you need to understand that to make money, you must lose some money, and it's actually the only way to do that is to take those losses early and to let the winners run. And Aiva here is a beautiful example of something that's just making us a heck of a lot of money, right? Trade Vision, does it support European stocks yet? No, not yet, not yet. We're just discussing that at the moment, to be honest with you. I know you guys, some of you want British and European stocks in there. We haven't so far. 90% of the money is in the US. So, but obviously, as the European community grows, we are not against it. We're looking into it at the moment for like data, and to make sure that's like a fair spend, essentially. The way I always see it with Trade Vision is that we do it for the community, and like if we spend money on something, it needs to like benefit kind of everybody. So let's have a look at what the costs are and what the options are for that. But yeah, it's something I'd like to do. So it's definitely on the list. Thanks very much. ETFs as well. Yeah, that's definitely also on the list. Swedish. Well, yes, you guys we treat you as Europeans, if that's okay with you. Thanks for the white screen. Easier to read. I know, especially, look, I'm actually so happy the guys put that out, because I've been sitting on a beach and on a boat and on my little garden here, and I can't see the black screen. I literally can't see it. It's just too bright. Whereas this I can actually see. Like, we give me one more piece of like high value information. The VIX, right? The thing I look for every day. And again, I absolutely love that. Who here actually looks at the VIX? Put a V or write VIX in the chat if you actually look at the VIX, and it means I've infected you. It's something that really only the institutional guys look at, options traders look at, but it's just such a beautiful indicator that everybody might just want to have a look at the beginning of the week and go, hey, is there a lot of panic out there? Is there a lot of fear out there? What's going on? And it's up 12% today. That's pretty significant. So that's something that might make you want to like think about like how much risk are you willing to take on this week? And when it jumps significantly, I'm loving all the V's there, guys. That's amazing. We're probably the only community in the world where, a couple of hundred people or even thousands of people are willing to put their hand up and go, I'm a bit weird. I look at the VIX in the mornings. So I love you for that, guys, because it means you're learning. Amazing. But yeah, when it pops up 12% in the morning, like that's a pretty big pop, right? It's still below 20, which is important. So we haven't moved into like complete panic, freak out, fear. But 12% up is significant enough to pay attention to. So what does that mean? Well, for me, the first thing would always be, well, maybe we make our positions a little smaller that we set up this week. That could be one way of dealing with it, right? There are other ways of dealing with it, but I've already taken care of all the risk in terms of stop losses. So for me, there are kind of levels to it. I think last week was probably also a good time to buy it. I was thinking about it. I didn't in the end, actually. But clearly, it would have been a good opportunity this morning. But if you zoom in a little bit and then watch it during the day, it has actually come down, because this is something that trades way earlier than the stock market, right? So it's, the market's already open on the VIX futures, and it's actually come down a fair bit already. So we were all the way up here. We've come down 1.5%. We're still below that 150-day moving average line there, which is good. It's just keep an eye on it. If it pops above 20, the market's going to get a bit more antsy. And what it essentially measures is like how many people are buying put options and sort of how many people are panicking and buying insurance today. Right? Up the Saint says, just started to go through your 6-hour investing course video. Long way to go. Thanks for sharing all your knowledge, insights. Brilliant. And there is a playlist on the channel which is called something like Felix's courses or something like that, and I think there are like 2 or 3 like full-length course programs on there. They're completely free. Like I always say, we give away 90% of the stuff we do here for free. Also on Thursday, I'm running a live webinar for you guys where I'll teach you a tremendous amount, and I think we all deserve it. And I think the real fun is, you know, I walk around, I meet people. Like, where was I the other day? I landed and I like spotted someone on like day 1. Oh yeah, I just got back into Monaco, and literally within, yeah, actually, I was in a cafe. I walked to the bathroom. Door opens. The guy comes out and goes, Felix, which is amazing. And if you do ever see me, do say hello. I really appreciate it. And you know, he was doing very well, and it's amazing. So that's for me the whole like reason for doing this, is just to like get that satisfaction and see that joy and see those smiles. So keep learning, keep absorbing all the stuff we do, and join me on Thursday. felixprehn.com/webinar. You're going to get a lot more value there than ever. Palantir, all right, sure. We can have a look at some of our favorite tech stocks here and have a bit of a look there. So Palantir, I think we just actually had a look at it. It was just coming down a little bit. So the whole market is going to pull down a little bit. The stuff that's going to pull down the most, this is 4% down this morning, is stuff that's like innovation sort of stuff, right? High risk. ARC's down 3% this morning, for example. And you kind of expect that. And all the growth stocks get hit because bond prices, essentially, or bond yields rather, will go up. So interest rates basically go up because Moody's downgrades the US. So money gets more expensive, and therefore, well, stocks become a little bit less appealing, because we could make 5% just buying US treasuries, which are apparently risk-free. So everything is down a little bit here, and that's okay. And I think if we pick it nicely, there are some really nice opportunities here today to nibble on something a little bit better. I see Zim in the chat there, and that's coming up quite nicely. If you collected the 30% dividend here, you'd be up what, 20% just on that. It's still below the 150 though, so I never bought it because it didn't match my rules, but it's certainly improving pretty significantly. Are you going to the Grand Prix? I'm not actually this year. No, I'm not. We're gonna shoot off before it happens. We had a lot of fun here, but it's a nice thing to do. Actually, the Grand Prix. It's a really nice atmosphere there in Monaco. I was driving through it. Yes, I drove through the track yesterday, which is a really fun thing to do. Just have to not speed too badly because there's police everywhere in Monaco. How about United Health, UNH? So they got hit obviously very hard, threatened with a criminal investigation or something. The 2 of the insiders, I think CFO and CEO or something, I could be wrong on that, they bought some shares, I think, I don't know, 25 million worth or something like that. Check the numbers, I'm not quite exactly sure on those. And that's giving the stock a little bit of confidence here that maybe we are oversold. No idea, to be honest with you. I'm not a bottom fisher. I have rules, and I don't have rules that say something's collapsing, 3 gaps down, everybody's sold, below all moving average lines. Must be cheap now. No, I don't know that. It could be that it's going to drop to 0. Right? I'm not saying it will, but it could. So at this point, the likelihood it's going to go down is much greater than it's going to go up. So I don't buy stuff like that. I just don't care about the latest news or missing the opportunity or, but what if it doubles? Wouldn't it be amazing? Yeah, I really don't care. Because we can make a lot of money based on rules and, you know, our AVA stock's up 130% right now, for example. And you might think that's luck. Well, if you saw my portfolio, then I'm very, very lucky. Luck only gets you so far. So luck is essentially, and luck's a beautiful thing, but luck is essentially, well, market goes up. I happen to be in the right sector. I'm making money. I'd rather be like, I'm buying the things that the institutions are buying based on the same rules institutions use. And that means I can make money even if the market goes down. And to me, that's the funnest, actually. And the market's crappy. Say this is a crappy week, and I don't know, it will be. I mean, maybe the tax news will get us out there, or the tariff news will get us out of this little sell-off here on a Monday. But if it's a crummy week and I make money, I'm way happier than last week where everybody made money. And I probably made a little bit more money than everybody. Like, I'm like, okay, it's kind of easy. It's kind of like, it wasn't that hard. It could have bought almost anything last week and you would have made money. But it's weeks like this where I'm like, well, this is actually where the system kicks in. This is actually where the features kick in. This is really where we make our edge. So you want to learn that? Come and join me Thursday, 10 a.m. Literally right after my live stream on Thursday. We're going to pop into our private webinar channel, felixrenz.org/webinar. So grab yourself a seat there. Let me see any other questions we've got in here. Tony saying, you're saying there's always opportunity, so never stress any stock. Correct. Doesn't matter what you make money with. There's always, I mean, even in like terrible weeks, we still find like a dozen opportunities. And most weeks we probably find 30 opportunities. So there really isn't a limit on it. And I don't have to make my money with the latest thing, which is Tesla or whatever, or, you know, okay, Archer is actually, that's actually on my list this week because it looks beautiful. That's a really lovely run up. Get a little bit of a pullback here. I like a good pullback too, because we were quite overextended. So we might be able to get some ACHR a little bit cheaper here. So yeah, it looks good. So you have to sort of crouch forward to read the screen because it's a little bit dark or bright here, depending on how you look at that. I don't like Tesla. You see, I also don't care about things like that. I just don't care really about like whether I like a stock or not, mostly. There are certain things that maybe are outside your risk parameters, and maybe that's foreign stocks because you think they're affected by stuff. There's certain sectors that I try to stay away from, but generally speaking, I don't care what the stock is. Like, I don't really care what they make. I don't really care what they do. Like, you know, AIVA is like, what is it? What do they make? Like tires or something? Some sort of trucking, something boring. I have no idea. What does AIVA make? I have no idea. It's up 130%. I honestly couldn't tell you what they do. Auto, tires, trucks. Sounds exciting, doesn't it? Well, if it's up 130%, it's exciting for me. But that doesn't mean I'm going to love the stock. I probably won't read the earnings report. I just don't care, because all I do is move my stop up, and when it starts coming down, well, it'll sell for like 100% plus profit. So we're happy with those kind of setups. Philip Morris is doing well. Actually, I was talking about that yesterday with a friend about how evil tobacco is and how much money it's making. And I mean, you see a lot of people in Europe vaping these stupid things that kill you. And it's just like tobacco has managed to rebrand itself into, it's like a new product. It's bizarre. They've just done such a good job, really. Not very ethical, but yeah, that's a lovely stock. That's a lovely one there. What else have we got in here? Tesla. Yeah. BA. So yeah, we were looking at some defense stocks, and I mean, they've done well, right? I mean, here is a shitty company, right? Terrible management, cost overruns, it's late on everything, you know, lose tires, doors, pilots, whatever. And doesn't matter. No, it doesn't matter, because the market basically said, we like it. And the market basically said that here, because we exceeded these highs here, and therefore we triggered that buy. And then look at the volume. Institutions are buying it. So you just got to follow like the crumbs, right? the Blackstone CEO gave an interview the other day, and they asked him, like, how do you spot an opportunity? And he said, the market leaves crumbs, and it's like little crumbs on a black dress. You see them, and you see one, and you're like, interesting. And you see two, and you go, I should look into this. And you see three, let's fucking go. He didn't say that, but you get the idea. So that's what we do. We just look for those patterns. We look at for those, do we trigger those rules? And then everybody looks at the same thing. I mean, how much money does Blackstone manage? Like, I don't know, a lot. So a little bit more than me. So why wouldn't I use the same framework and rules and patterns those guys use? So I'm just piggybacking on the institutions, essentially. And that's what every successful investor and every successful trader has done for the last 50 years. Yet most of us think, oh, we need to just like fall in love with a Tesla stock or Palantir or Archer or whatever the latest thing is. And that's how we're going to make our money. Maybe you will, because maybe it's got the right pattern. But if you don't know what the pattern is, then it's just like the casino, right? So some friends of mine went into the Monaco casino on the weekend. You know, that's not a place where you make money. It's rigged against you. So the market, on the other hand, it's exactly the opposite. Like, I believe you can be the house. Yeah, it was Blackstone. It wasn't BlackRock. It was Blackstone. And so on. And another thing, actually, if you want to dig a little bit deeper into institutions, we have in Trade Vision here a little feature called dark pool trades. And you can look at any ticker. You can look at the whole market if you want, and you can see what institutions are doing live, and say it's something like, you know, Tesla or something. Say I type Tesla in here, and you see that up here on the right. You can see that, right? And then see, like, you know, is the market bullish or bearish on Tesla? Well, it's slightly bullish, and I can see like what they're doing and you know what they're not doing, and I can see the size of the trades and everything else, and that's again a little bit of an indicator, because we now see what the institutions are actually doing. It's not the entire answer to the world, but it's a little bit of a clue again, which is useful. Blackstone guy didn't give his rules away. No, of course, why would he? He's got $1 billion business on the basis of that. So he's got no incentive to do it. I do. So come and join me Thursday, and you'll learn them, my friend. Alrighty, so where are we at? Market is open in a minute, I think. Crikey, it's hard to read the screen. Let me just zoom in. Okay, there we go. That's a bit better. Are the dark pool updated live? Yeah, they're live, and you can see them literally coming in when the market opens. They'll come in like minute by minute sort of type thing. You can select the date, so the market's still closed, so it'll change to Monday in a second. Nothing found yet, and when you do that, the market opens. They'll literally come in every minute, so you can see it exactly live. Love the sentiment edition, Scott. Yeah, appreciate that. And thanks for that. I actually think it looks nicer in the dark. Hang on, let's go to Friday again. Where's Friday? Here is Friday. I think it looks a little nicer in the dark version, actually, right? You can really see it. But yeah, we're gonna pop up the colors a little bit. But yeah, I think it makes it easier to read, which I think is the challenge at the moment with like so much data, especially for people who are not used to it. So yeah, we want to always make it easier for you guys to use, and that's inside Trade Vision. There's a link down below for it as well. Have you heard anything about space? Lots of stuff. I don't know anything. I mean, I don't own any. Seems like a highly speculative thing. And wow, the mosquitoes are really going for me here. That popped up very hard. Yeah, big pop-up, but it still doesn't comply with my rules. So I'm not in it. Maybe it will. Maybe it'll go a little higher. And, you know, highly speculative, moves a lot, but we don't mind that as long as you can make money with it. Looking at the VIX in dark pool is interesting. That's a good one to do, actually, Scott. Yeah, for sure. How far do you move your stop up compared to current prices, says to Tom. So to me, it's really about like, what's the chart saying to me? Like, is there a natural support? Which is also, so my last stop was here, because that's a little bit of a natural support. Now we're pulling down a little bit here as the market's opening up. So it depends on where we close. So I always look for like Is there something on the chart that could be support? It could be a moving average line. It could be like a couple of bottoms, something like that, and then be a little bit below that. That's usually what I look at. IVE's down 5%. Yeah, it doesn't really matter though, does it? Do you know how much money we made so far? So actually things coming down will, lock them in. So yeah, at one point we were up 119%. Now we're up 100%. I'm not upset about that in the slightest. We close at wherever my stop sits, I'd be very, very happy. So it's all good. Which UK platform supports your software, Felix? In terms of broker, the UK, I think Tasty, Interactive Brokers, a few others, I think. Just have a look at it there's a thing up here somewhere. It'll tell you when you import here. Trade Tracker, Webull, Trading 212 now supported. So there's a whole list of brokers that we support, and we'll keep adding to that. Joseph, my friend, I'm glad you're learning. How do stops work after hours? Yeah, it's so funny. I get that question like every single day. And they don't. They don't. They only open the market, work when the market's open. And then people go, oh, well, that means I'm not going to set them because the risk is too great. It's a little bit like saying, I don't know what the equivalent would be. Seat belts fail 1 in 1,000 times, and therefore I'm not going to wear one. You know what I'm saying? It's just no risk management is going to work 100% of the time exactly the way you want, no matter what you do, right? And if you want 100% certainty, well, you can't leave your home because you're going to get struck by lightning, and then you're going to get run over by a bus, and then you're going to get on a plane, it's going to fall out of the sky. And like, there is always that outlier event. Now, say even if it were to happen to you, like 1 in 500 stocks or something, or 1 in 1,000 trades, it just has zero impact on your overall profitability. So the fact that it can happen, and it will happen occasionally, maybe like once a year, or depending on how active you are, doesn't matter. It just doesn't matter. So just focus on execution, focus on being disciplined, focusing on following the rules, focusing on setting those stops, and adjust them once a week if necessary, and leave it at that. And if you really want to be really, really like careful, then don't own stocks over earnings events, for example, because that's usually when the big moves happen, right? So it's just something that happens so rarely that it really doesn't matter. So don't get hung up on the outlier when 99.9% of the time it works really, really well, which is really what it's all about. Why the market's not open 24 hours? Well, there is a push towards that. I think it's kind of silly, honestly, because what's the advantage? Like, if you're losing money, you're going to lose more money if it's trading 24 hours. And if you're making money, you're not going to make any more money because you could do it 24 hours. It's just no advantage to that whatsoever. Other than for brokers, maybe to make a little bit more commission because you're now going to be trading drunk at 3 in the morning. So yeah, I'm not a fan. I don't see any advantage. I mean, if the market was open 2 hours a day, we'd still be making exactly the same amount of money than if it was open 24 hours a day. So it's really not about availability and when you can trade. It's really just about like, what's your framework? What are your rules? Why are you buying what you're buying, and when are you selling it? And if you don't know that, and if you haven't got that written down, like, you're going to have a really tough time. But if you do want to learn that, come and join me Thursday. Felix Prehn webinar. I'll literally teach it to you. There's a link down below as well. How to select institution trade size trade in dark pools, Edward? All dark pool trades are institutional trades. So they all are institutional trades, but you can see the size. Lulu's going up. VIX is up. Let's have a look. Let me share my screen with you guys again. That looks pretty good, right? We're coming down a little bit on the VIX, so the market's kind of going, yeah. We already knew there was too much debt. So it's up 13%. It's true, but it's at 1896. So we're below 19. That's pretty good. One point we're at 1996 or something today. So this is actually positive. I'd say this is broadly positive. And if we look at the NASDAQ here, we should also see a slight improvement. And yeah, we can see that here. So we're moving up a little bit, down 1.1%. It was 1.4% when we opened. So that's pretty good stuff. If we look at some of our other favorites out there, like an Nvidia, say, that's down 1.8%, which isn't huge. It still keeps us in the same pattern we were in the end of last week. What about a Tesla, say? That's down 4%, but this is Tesla. This is a volatile thing. We're at the same level we're trading at on Thursday, so this is not the end of the world at this point. Archer's down. Okay. Well, everything will be down today, like especially the more risky things. And it's a nice pullback, isn't it? I'm going to enjoy the pullback, I think. So I'm going to likely set up some sort of buy order on the pullback here. How long to hold sideways stocks? I hold them until they trigger my exit. So I don't mind stocks doing nothing. There's nothing wrong with them doing nothing. You just might want to like move your stops up a little higher. If it creates a sideways pattern, you might want to set it slightly below that so that you don't get, you know, kicked in the teeth if it does drop hard. Auto or manual stop losses? If it's manual, it's not a stop loss, my friend. Then it's going to be a fight with your emotions, and it's going to be a fight with you. Oh, but it might recover. Let's just wait half an hour, and oh, you know, that kind of thing. No, you got to automate it. If your risk management isn't automated, isn't risk management. It's an emotional struggle, and emotional struggles tend to lead to large losses, not to financial freedom. And so my goal here is also you have to watch the bloody thing. Like, are you always staring at all your stocks charts? Like, if you do, please get a life. I don't watch my stocks. I don't have charts open. I don't do any of that. I set them up on a Sunday, and then I forget about them during the week. Now, do I glance at my broker once a day? Yeah, I do. On my phone, I just look at any big moves. So sort of up, down 10% is the only thing I'm interested in. I don't look at any of the other stuff. And actually, the down, I don't really care about that much either because there's a stop. It's just if something's up 10, 20, 30%, then I might want to move my stop up to lock in some of those gains. That's really the only thing I ever do during the week. So it's a very, very, very time unintensive activity what we do here. So if you want to, some people come to me and say, oh, I want to trade full time. Like, you got any hobbies? Because if you don't, you're going to struggle because there isn't really that much that you could possibly be doing. Liquidity sweeps. Yeah, there is a funny thing about this. There's this rumor out there that market makers hunt your stop losses. And it's kind of nonsense because think about it. Like, okay, I've got 3 or 4 market makers on my team. So we know what they do. They don't try and look at Edward's, you know, $2,000 position in Tesla and try to kick him out. They don't care. They've got bigger fish to fry. So it's just something that's kind of spiraled away from reality. So no, it doesn't matter. Don't worry about that. Just worry about what you control, which is like, what are you buying? When are you buying it? At what price are you buying it at? And where you're selling it? That's the only thing that you should have rules for. The rest of the world, what Trump does, what the Fed does, none of that really, really matters all that much because the chart is at the end of the day where you make your money. Hedge funds are hunting Mr. Smith. Yeah, exactly. Like, I mean, they just don't care. What's a market makeup? That's a good question. It's basically, okay, positively, they provide liquidity. Basically a hedge fund. So a hedge fund, essentially, they don't just go and buy a stock, right? They'll hedge that position. So say if I set up a position and they are the seller, so they say this in a simple way, say they sold me some stocks, they would hedge that position with options to go back to 0 risk. And then they'll adjust those positions on depending on whether the price is going to go up or down. It's a little bit more complicated than that. But essentially, they act on certain automated, they have to do certain things. So one of the ways you can see that is the stops and the support and resistance that we've got in here in Trade Vision. That shows you what those guys are doing. So when we hit certain levels, you know, they get triggered, they have to sell the red line and they have to buy at the green line. So we can calculate kind of where they're at. So largely it's useful, very useful, but it doesn't affect you like day to day. It's just another bit of information that can help us make better decisions. Seb's asking me, should I keep my 1 share of Eva? Can't answer that. Be financial advice if I did. But what I can say to you, my friend, is don't ever buy something again unless you have rules. Seriously, just don't. You're gambling. You're just in the casino and you're going, or at the racetrack and you're going, that horse is going to win. And you've got no freaking idea. That's the only thing you're doing. So don't set up investments or trading positions unless you have an exit plan. Forming the exit plan when the thing is up or down significantly is a bad idea because you're now just making it up. You're just winging it. And if you're winging it, well, you're going to get below average returns. And if you don't want to learn, buy the index. Just leave it at that. You get average returns, but at least you get returns. And if you actually want to learn the rules, well, come and join me on Thursday, felixprehn.org/webinar, Thursday, 10 a.m., like right after our live stream here. I'll walk you through the actual rules. I'll walk you through the things I'm buying this week. And you walk away with that framework that I use and that all the successful investors out there use. What do you think of AI trading bots? I've yet to meet one that works. So the problem with bots and algorithms is that they work in a certain market, right? So if everything is going, say you're in this period here where everything's going up, the thing works beautifully. And then it goes down the market and then it's like, oh, we hadn't really programmed that in. So I've yet to see one that really works. And if you look at Wall Street's algo funds, I mean, these are billion-dollar funds. They've got all the, money in the world to build whatever they want. They tend to underperform the market, the index. So for some reason, we still need humans. We're working on a ton of stuff like that, automations and algorithms and stuff, because I also want to be able to, ideally, I'd like to do all my stock selection completely automatically. And we're working on that. We'll probably get there at some point, but we're not there yet. What was that? Got stopped out of something? Hang on. Jonathan says, just stopped out of 3 stocks, but with the rules, they ended up green for me, waiting and studying for the next entry point. Brilliant, Jonathan. And I love you for that. And that's really the spirit. It's like, if you get stopped out of stuff, like that's a good thing, right? And most of the time you get stopped out for gains. And the times you get stopped out for losses, most of the time you'll be happy about that in a week because it went down another 30% after that. So follow the rules, learn the rules, get confidence in the rules, and then just execute on them. And it makes your life so much easier and so much better, and the smile on your face will be greater. And yeah, when you see me, say hello, because it's always nice to meet people who are benefiting from this. And we'll all live happier ever after. That's really ultimately the goal here. So I look forward to seeing who's joining me on Thursday. Put a T in the chat if you're joining me on Thursday for the live webinar. Links down below, felixprehn.org/webinar. And I'd love to see you there. I'll be traveling a little bit the next couple of days, so we might be live slightly sporadically. I'll let you know in the community here. And seeing some teas here. Brilliant, guys. So see you on Thursday. All of you guys, there are lots and lots of teas. If you haven't signed up already yet, felixprehn.org/webinar is where you do. Make sure you show up on time, please, because we will literally, the guys who run the webinar software, they said to us, only the first 1,000 people can live chat. There is just a limit on how many people they can handle. We often have like 2,000-3,000 people on those. So show up early, and that way you can actually chat with me. And I wish you a beautiful rest of your day. And we're going to go off and I go for a swim, really. I think that's probably the plan. All the best.